This is Andy Chambers. Thank you for joining me for today's update. We're going to start by taking a look at the big picture, then we'll look at some individual stocks. As of Friday, June 24th, the Dow is still very weak. The next hurdles for the bears are this year's low of 11,555 and the December low of 929. Right now, the Dow is deeply oversold and due for a bounce. The initial hurdles for the bulls are seen at 12,217 and 12,574. A close over this year's high of 12,786 would reaffirm the bull trend. At this point, we're still planning to sell rallies. The QQQ, which represents the Nasdaq 100 index, touched support at this year's low. We expect it to bounce from here. The initial hurdle for the bulls is this month's high of 58.36. That's the June high. A close over 59.34 would reaffirm the bull trend. A close below 53.62 could result in a further decline. The next support beyond that is seen at 50 and 48. The IWM, the Russell Small Cap Index, also bounced off of support at this year's low. The initial hurdle for the bulls is this month's high of 84.86. A close over this year's high of 86.82 would reaffirm the bull trend. A break of support at 77.23 could result in a further decline. The next support beyond that is seen at 74 and 70. The XLE, or the Energy Select Spider, completed a head and shoulders top. The downside target for the pattern is 65. The next support beyond that is seen at 62.50. We're looking to sell rallies. Johnson Controls, or JCI, formed an inverted saucer top and broke support at this year's low. The break of support suggests that a further decline is more likely than a further advance. Be alert for signs that the current rally could be over and the decline could be resuming. The initial downside target is near 30. A close over this year's high of 42.53 would reaffirm the bull trend. A close below the April low of 66.26 would confirm the completion of a head and shoulders top for Baker Hughes, or BHI. The downside target for the pattern is 53.25. Pattern targets aren't perfect. We would probably be inclined to take profits between 55 and 60. National Oilwell Varco, or NOV, broke support early last month. The break of support suggests a further decline. The weekly chart is relatively wide open down to 50. A close over this year's high of 82.80 would reaffirm the bull trend. The big gap down on June 23rd suggests a further decline for GLD, or the Spider Gold Trust. The initial target is near 140. The initial hurdle for the bulls is the June high of 151.86. Recent trading suggests that a top could be in place in Johnson & Johnson, or J&J. The initial downside target is 61. A close over 67.37 would reaffirm the bull trend. Coach, or COH, appears to be poised to complete a head and shoulders top. The downside target would be near 53. A close over 64 would void the pattern. AutoNation, or AN, is an example of a previously great-looking pattern that doesn't look so good now. This is the way the chart looked on June 13th. Luckily, at that time, I thought it had fallen too far to play to the downside. I thought I might get involved if it rallied and rolled over again. As you can see, AN did rally, but now that picture-perfect looking head and shoulders top doesn't look so good. We're going to leave it alone for now. It could still work. A close over 36.22 would void the pattern. The bottom line is, no matter how good the patterns look, they don't always work. Boston Properties, or BXP, broke support rallied, and then turned back down. The next support is seen at 96. A close over 108 would reaffirm the bull trend. Wynn Resorts, or WYNN, broke support near 140. A rally back toward 140 could set up a new selling opportunity. A close over 151.69 would reaffirm the bull trend. Heinz, or HNZ, also broke support. The break suggests a further decline. A close over 54.50 would put the bearish outlook on hold. International Flavors and Fragrances, or IFF, looks like it's forming a top. A close below the June 23rd low of 61.25 could be a sign to get short. The wide-range bearish reversal and break of support could mark a top for Moody's or MCO. A close over 41.93 would reaffirm the bull trend. Marathon Oil, or MRO, appears to be poised to break support. If it does, the chart will be relatively wide open down to $35. A rally through this year's high of 54.33 would put the bearish outlook on hold. Stanley Black & Decker, or SWK, just broke support. A rally back toward the breakout point near 72.50 could set up a new selling opportunity. A close over 78.19 would reaffirm the bull trend. Family Dollar seems to be struggling at the current level. A close below 51.25 would complete a head and shoulders top. If a top is in place, the decline could fill the gap down to 44.50. A close over 56.92 would reaffirm the bull trend. A break of support near 76.50 could mark a top for Humana, or HUM. Well, that's the last stock for today. Thank you for your time and attention. Good luck and good trading.